I'll let you get back to the real one in a minute, but this was in the Voice this morning. Farmington Rotary meeting topic is benefits, and it goes and says, not quite all his titles because there's a bunch more, but presenter for this meeting is Jan Sherman. And then I like this part here. Mostly he is known as the Benefits Tamer. Thought that was quite cool. So let me see if I can stop share and get back to that. Okay, I'm going to let you take over, Jan. You can give yourself whatever wonderful introduction you'd like, and we'll continue from here. Anytime you want to share, I believe you can take over and share from your end.
All right, why don't I do that? Okay, so everybody's seeing that now?
You betcha. Health insurance in transition.
There we go. So yeah, my name's Jan Sherman. I have my own agency is the Benefits Edge. I've been in the insurance business for about 35 years, and according to LinkedIn, this is my 21st year having my own agency, and very active in the community. I'm the executive board of directors for the Farmington Chamber, and I'm a regional director for Local Business Network. So all these little pieces sort of come together and I think help me do a better job for folks. So I was going to talk today about two topics. One is a lot of people are just dealing with transitions these days, whether, there we go. Whether, you know, they're retiring, they're becoming entrepreneurs, people that got tired of the rat race, or just they're not comfortable going to the office anymore, or getting laid off and having involuntary transitions. So now what? What do they do? I get calls like this every day, and people are in a panic. They want to know everything. Well, am I going to get COBRA? Well, you know, I can always tell them that it depends. So that's a great professional opinion. But COBRA depends on the company. Companies that are more than 20 employees are mandated. They're required to offer COBRA. Companies with fewer than 20 are not allowed to. So there's no options there. A lot of the smaller companies call me. I do employee benefits for about 40 companies, and very often the smaller companies, they care about their employees and they have to lay them off and they don't want to, and they ask if they can keep them on the insurance, and they can't do that. So COBRA is really based on the size of the employer. Why is it so expensive? I get that question every day. Why is COBRA so expensive? Really, COBRA is actually not insurance. COBRA is the law that says that these larger employers have to offer you the opportunity to continue your coverage as an ex-employee, but now it's at your cost. So the employer contribution, which is generally half to 80%, goes away, and the employees now are paying the full cost for their coverage, and it can even be marked up 1%, 2%, or 3% to cover administrative costs on the back end. So yeah, it's expensive. What I find too is most often people are overinsured. They don't need the rich plans they get from their employer. You know, when it's a gift, it's a great thing, but it's not necessary. So what are their options? That's why they're calling. They generally have seen their COBRA and they'll tell me, oh my gosh, it's $1,300 a month and I can't afford that. Well, that's probably true. So they can accept COBRA if they want to, and the COBRA letter gives them 60 days to respond. Well, we can talk about that in a little bit. They can enroll in a plan through the marketplace or healthcare.gov, whatever all different names for it these days. Some I can't say. And then alternative temporary coverage. So we have a few different ways to go. So basic rules, when the coverage starts, what do we have to do? The biggest mistake people make is paralysis through analysis. They get scared and they don't do anything, or they hear in the news how expensive health insurance is, and then they get their COBRA letter, and that's proof to them that it's unaffordable, so they just throw up their hands and do nothing. And especially in times of COVID, that's not a smart move to be uninsured. So they have 60 days from the marketplace to replace lost coverage. If we apply on the 61st day, they will get a letter from the marketplace from healthcare.gov saying, basically, nice try, too late, see you in January. So they need to act. The new coverage generally starts the first of the month. So that can be an issue for folks calling me today because their coverage won't start till October 1st. And there are some strategies that we can put together to fill in that gap. That's not necessarily a problem, but it's a little unsettling. COBRA gives you also 60 days to respond, but right now, there are exceptions to this. The new COBRA COVID rules now say that your 60 days doesn't start until the COVID emergency has been lifted, but they don't define what that means. So my advice to my clients is just use the 60-day rule. There's really not a big advantage to waiting, but I can see situations where people will, things will fall through the cracks and we may have to try to take advantage of that for them. And then very often folks are asking me, well, I've got all these pre-existing conditions. I just went in for a surgery, or I was told I need this. Is that going to be a problem? Well, marketplace is guaranteed issue. So there are no pre-existing condition exclusions. You start clean and all your benefits are available to you. So that's a plus. And that's why there's all these rules about when you can enroll, because it is always guaranteed issue. So if they didn't have parameters for open enrollment or special enrollment periods, nobody'd buy health insurance till they got sick, and then they would jump on. And I'm sure you can see how the insurance companies wouldn't be real happy about that. They love to insure healthy people. All right, so then the other big concern is, what is it going to cost? How much is this insurance going to cost? Well, it depends on three things: your age, your income, and then are you a smoker? That's the only health-related question we're allowed to ask, and that can increase premium up to 50%. So it's a huge consideration. So those are the three things. So, before healthcare reform and Obamacare, I spend a lot of time talking to people about their health because the plans were underwritten. Now we spend the time talking about their income because that's what's going to vary their plans. So here are some examples. I hope you'll find that you won't find it as interesting as I do, but I hope it's at least interesting. First thing in the morning is a challenge. So here we go. So let's use this example. I have a gentleman age 60. He calls up and we ask, well, what's your projected income? We use your modified adjusted gross income. So as an employee, that's probably everything you've earned with very few deductions before you have taxes out. Self-employed can deduct the business expenses. So he says, yeah, at least 50 grand this year for my household. And it is truly household. So if his spouse or even adult kids have income, that gets rolled in as well. All right, so I run the first quote and we come up with a couple of ideas. So there's a Blue Care Network plan for $543 a month, and pretty catastrophic, $8,150 deductible. And that's also their max out of pocket. And that's the key number. That's what I try to educate my clients about, that's the only number that really matters. Because what you want to know is, if I go in the hospital, I get a bill for $500,000, how much am I going to have to spend? And when you put it in that perspective, 8 grand is not so much. It's not nothing, but it's manageable. $500,000 is not. So that's why you're buying the insurance. The fact that this plan has a $30 office visit copay, that's a nice decoration, and sure, I'd rather spend 30 than 100, but that's not why you buy insurance. So that plan has a $30 primary care copay, and there's more stuff behind it. $30 mental health, virtual visits are free, urgent care copays. Both plans are very similar. The Priority Health plan is a little different in that they're both HMOs, but Priority Health, a lot of my clients like because they don't require referrals to see specialists, and they have a bigger network than the Blue Care Network up above. And this one also includes a $5 generic drug copay, and Priority Health rolls in a vision plan and travel coverage and all sorts of extra perks. So we look at those, And my client says, okay, well, that's great, but I can't afford that. I think I'm just going to skip it. So we dig a little further, and I said, well, but you have a business now, you're self-employed? Yes. I was laid off 3 months ago. I've had my business for the last 6 months. And well, what's the net after your write-offs? How much do you make? And well, then I'm probably around 30,000. All right, that's a better number. So let's see what happens. This is all the marketplace magic. Same plans. Okay, how's this feel? $73 a month for the same coverage, or $102 for the marketplace plan. I think he's a lot happier now. So here's situations where you can celebrate earning less money. Not often that you can do that, but there is a reward for that here. So we go a little further, and he says, you know, actually, I forgot I had to buy all my equipment to get the business started. I'm probably going to net it like probably 20,000 this year. So 20,000. Okay, well, here we go. Now I'm a hero. I can get him his coverage for free. Same plan, exact same coverage, exact same network. Blue Care Network, 0 premium, and Priority Health be $1. So these plans are adjusted this way because they get tax credits. So the media makes this very, very difficult to discuss, and they scare people, and they use the words incorrectly. They call everything a subsidy. These are not subsidies. These are literally advances on tax credits. So if they didn't use the $500 now to reduce their premium, the $500 a month would come off of their taxes when they file at the end of the year. So it's truly a tax credit. It's just a tool that the feds make available because they understand that it can cause cash flow issues. So they're helping by getting this money out to you ahead of time. All right, so very happy, but then he says, you know, but I didn't tell you that $8,000 deductible is going to kill me because I'm really sick. I've got a lot of meds. I go to the doctor a lot. I may need a surgery. I can't do $8,000, especially now, you know, starting a new business. So, okay, there's another thing. So we talked about tax credits. Subsidies are also available. So at $20,000 a year in income, we can get him plans like this. So he's going to pay a bit more, but now instead of an $8,000 deductible, we can get him a $600 deductible, 600, not 6,000, and $2,400 maximum out of pocket. So once he spends $2,400, everything covered by his insurance is covered 100% for the rest of the year, including his drugs. So this is a tremendous blessing for folks that are sick and lower income. And there are actually plans that are more comprehensive than that. If he made a little less money, there are plans that would give him like $150 deductible and $500 maximum out of pocket. So these are the subsidies. Tax credits lower the premium, and then the subsidies lower your deductible and your maximum out of pocket and your copays. So the marketplace really is magic, and there really is hope for folks that are struggling. I'm really privileged that I can help people with this because they're lost. Typically, when they go into the marketplace and try to do it themselves, they do it incorrectly. And you know, I have clients occasionally that they want to be considerate and do it themselves to save me time, and it generally doesn't, because it's much harder to untangle things and set them straight than it is to just do it right the first time. So I work with a lot of people. Also, I don't charge anything for what I do. And I think that's another concern folks have. If they get laid off, now they don't have income and they're afraid that they're going to get a big bill from someone that's going to help them. I get a commission from the insurance company for doing what I do. And the rates for health insurance, they're filed with the state. So whether they buy from me, go direct to Blue Cross or Priority Health, or do it themselves to the marketplace, those rates don't change. So it's just a matter of, do they want somebody with 20 or 30 years experience guiding them, or do they really want to do it themselves? And there are people that do. You know those people. You know, they're the ones that'll pull up to the mirror with a kitchen knife and do brain surgery on themselves because they saw a YouTube video. They get it. So not a good idea. Okay. So how do I know this stuff? I have this designation. I wish it wasn't quite so corny, but I'm in the elite circle of champions in the marketplace. Ever since the marketplace started, I enroll over 100 people a year in the marketplace. That's the only way you can know this stuff, is to live it every day and deal with it constantly, because it's a moving target. They're always updating, they're always tweaking. There's a lot of training that goes on. It's going on now for January. Excuse me, because every year the plans change. So this is sort of a nice thing, and I like to mention it. So let's go back to our client with the 50. He's back to the 50,000, and because he was an employee, that was it. There's no write-offs, no way to reduce it. His wife has some income, and he still is telling me, well, I just can't spend $500 a month. Not for this. I'm healthy. I don't use my insurance. I'm lucky if I even go for a physical. This is insane. And this is part of what happened with healthcare reform. It made healthcare affordable for low income people, but the rates doubled and tripled. So if you're middle income, you really have a tough road to hoe. So that's what we've got here. So there are alternatives. So what I can show him is a short-term medical plan. And this is a different animal. So now we do ask underwriting questions, but he's told me he's healthy, he doesn't use his insurance, so that shouldn't be an issue. It excludes pre-existing conditions. So again, shouldn't be an issue if he's not using his health insurance. But I can get him a plan now with a $2,500 deductible and 80/20 co-insurance. Co-insurance is exactly that, where you're co-insuring with the insurance company. So in this case, the insurance company will pay 80% of the bills after $2,500, and he'll pay 20%. And once he reaches $3,500 in premium out of pocket, everything's covered up to $2 million for the rest of the term. And this policy is $164.82 a month. So we're back to something affordable that can work quite well for him. So there's a lot of stipulations to these things. I'm not going to go into those, but as long as folks know what they're in for, there's a lot of savings to be made. And I've got a lot of clients that are doing these plans, especially second half of the year. Right. And I didn't say, you can interrupt if you like, if you've got questions.
Sure.
Oh, okay. Oh, there we go. You sure there's no questions? Okay. Yeah, I know. You just want this over with. So here we go. All right. So this is a big question people are dealing with now. You know, we've got the auto reform, and your car insurance, your auto and home agent may or may not have addressed this with you now. If they haven't, they will when you come up for renewal. But there's two big pieces here, and because of what they're putting on the table, your health insurance becomes a very important consideration when you're trying to decide if you should lower or eliminate your PIP coverage. So what do you need to know? First, do you have a qualified health plan? That's the first thing that you have to know. And most people today don't. Maybe through employers you do, but if your deductible is above $6,000, then you don't have a qualified plan. And most people today, just because of cost, they're buying bronze plans, which start usually around $6,850 and up. So right out of the chute, that could eliminate an option to lower your PIP coverage. Do they restrict or limit your auto coverage, injury coverage? How much will they pay? Do they coordinate benefits? Coordinating means that they'll work with with PIP, and they'll each pay their part. There are plans. I have a couple of employee benefit plans through a company that says they don't pay anything for auto-related injuries. So that's all stuff that's important to know. And then, so how do you find out? Well, you can ask me if I'm your agent, but really the best way to do that is call the customer service number on the back of your insurance card and ask them, and what they will normally do is send you a letter. especially Blue Cross, because it's a letter that I guarantee you can read it 100 times. You have no idea what they're saying. So it's all legalese, which is why they're not going to tell you on the phone, because they don't know the answer. It's all legal, but your auto and home agent will probably want a copy of that letter anyway. So you can even be proactive, because it takes some time to get it out to you. But ask for the letter, and it will outline how they're going to handle any auto-related injury.
So what's the name of that letter?
There's really not even a letter. You know, they'll know. That's a good question. I don't know that there's even a formal letter for it, but it's just, you know, how do they cover auto-related expenses? And some of them, like Priority Health, is the only one I know that has actually come out and made an announcement that they will pay primary for auto. But there's two things that come into play there. There's a discount that's always been available for having your health insurance pay primary, and that's not changed. The other part is whether you can adjust your PIP coverage, and that's what we're really going to talk about. But the big question in your mind should be, if your insurance pays primary. So, you know, PIP is very comprehensive. If your insurance is primary, that means if you've got an $8,000 max out of pocket, that you're going to have to pay your deductibles and everything before PIP kicks in. So even if they do pay primary, it may or may not be a good idea to set it up that way. All right, so this is, I put together a chart because there's a lot of things to consider. And I think most often, you know, we look at, have a car accident, I go in the hospital, what's it going to cover? There's a lot more to it. So I put together a chart that sort of compares Medicare and health insurance and PIP to help you make a decision whether the $100 or $2 a year that you're going to save is going to be worth that money. So accident-related medical expenses, that's the stuff you would imagine, you know, going into the hospital or, you know, getting physical therapy. So accident-related medical expenses, Medicare will cover some. The important thing to know about any of these things is Medicare still only covers what Medicare covers. The fact that it's auto-related doesn't change your coverage, but so they'll cover some of what's in the hospital, and it'll depend on what kind of supplement or Medicare Advantage plan you have as to how that will be covered. Health insurance is going to cover what health insurance covers. So yeah, you know, if you go in the hospital, you're going to pay your deductible and co-insurance, and it will be a covered event. PIP is going to cover 100% of your medical expenses. So right there, you could be saving $8,000 over your health insurance if you go into the hospital. What about lost income? You know, that if you have an accident, you can't work. Well, Medicare will not cover that. Certainly health insurance won't. If you have disability insurance, that's a different coverage that you can buy, and that would cover it, but it won't. PIP is going to reimburse you up to 85% of your income for up to 3 years.
Oh.
It's amazing. People don't know about this. Inpatient home care. So go to the hospital, you have an accident, now you're home and you're getting a nurse coming in. Medicare will cover some of that, but a lot of stipulations. You know, you have to sort of be in a hospital first for 3 days, and depending on where you're going, the coverage can be comprehensive or none. They'll pay for first 20 days in a rehab or a skilled care facility, but you have to have 3 days in the hospital first. So it's just sort of strange rules. I know my mom had hip replacement and was ready to leave after the second day, and they made her stay the third day, so if she went into rehab, it would be covered. So some sort of ways that the system just doesn't quite work in a reasonable fashion. All right, so that will be covered. There is some minimal coverage for in-home through your health insurance, but PIP is going to cover it all, 100%. You know, one thing that's also interesting about PIP coverage, if you've ever had an accident or gone to the emergency room, you may have noticed that they ask you many times, you know, are you sure this wasn't a car accident? Were you in your car when this happened? Were you touching your car? Were you thinking about your car when this happened to you? Because they want to build the PIP coverage. It's a gift to hospitals and doctors because health insurance schedules their payments. So the hospital gets a certain amount for, fixing a fracture. It's a negotiated amount. With PIP, they say, yeah, just send us a bill for whatever you think is reasonable. We'll pay it. So doctors and hospitals love that. And that's one of the reasons that auto insurance is so expensive, because they get to name their own price. That will go away in a year or two. If it happens, it's legislated that they're going to come up with a schedule like the health insurance companies. But right now, this is the way it's set. So doctors and hospitals, they love it when it's a car accident. All right, attendant care. So that's more like custodial care, somebody to come in, help with dressing or bathing. Medicare will cover some of that, again, with a lot of stipulations. Health insurance, sorry, they're just not interested. PIP will cover it all. Transportation costs to medical appointments. So especially if you're on your own, you may have to take an Uber to go to the doctor. If you can't drive and you can't or don't want to impose on people to take you, well, Medicare is not interested. You got to get there yourself. Health insurance won't cover it, but your PIP will. PIP is going to cover your transportation to and from your medical appointments. It's amazing. Home accommodations, what does that mean? Well, if you have an accident, you're in a wheelchair, and now you need ramps and grab bars put in. Medicare is not going to help with that, neither will your health insurance. But your PIP coverage will cover having that done for you. That's huge. People don't want to have to go into rehab. They want to be able to live in their homes comfortably while they're recovering. So that's covered. Skilled nursing facilities, so that's what I mentioned before, rehab. Your Medicare will cover that to some degree up to 20 days if it's a 3-day hospital stay. Your health insurance also with deductibles and copays will cover some of that, but limited number of days. Most plans limit it to 30 to 45 days, but you're going to pay your full, out of pocket. PIP's going to cover it 100%. Case management services, depending on your Medicare plan, if you have an Advantage plan, then that can be included. If you have a supplement plan, no. And some people intentionally take supplements because case management also means that you lose some of your freedom to make decisions. So could be good or bad. Same thing with health insurance. Normally it's not seen as case management, but if you have an HMO and you need referrals to see specialists and pre-approvals for things, to some degree you're getting case management. But here with PIP, they'll actually assign somebody to help. And in severe cases, that's important because you can have an army of doctors and a cabinet full of meds, and it's really helpful to have a professional watching this, making sure all the pieces are working together for you. So they provide that. Vocational rehab, Medicare will pay for some of that, but that and physical therapy, they're only going to pay for it if you're improving. And that's their opinion, their evaluation. So sometimes it can be pretty limited. I know, I use my folks as examples for these things. But, my dad fell and he needed he injured his shoulder, and they gave him his physical therapy and rehab for a while and said he wasn't improving and they wouldn't pay for it anymore. But he's 90 and he said many times that he's going to live to 106 and he wants all his parts working. So he had to pay out of pocket, but he continued to pay for his physical therapy and he was improving, and they actually resubmitted to Medicare. So there's limitations. Health insurance too, for physical therapy, vocational rehab, they may give you 12 or 30 visits, but it's a limited number. PIP is going to pay for it as long as you need it. Physical therapy is the same, so I won't repeat myself. Guardian conservatorship expenses, these are things people don't think about, but if it's a severe accident, so one thing is, back to the earlier ones, the skilled nursing facilities. I know someone who works over at Irvine Rehab, where they are only working with people with closed head injuries from auto accidents. And a lot of their residents live there a lifetime. They're getting amazing care, but PIP is covering 100% of that. They could not afford this kind of care if they didn't have it. And they don't take Medicaid. That's the other way people end up affording nursing home, is going on Medicaid. So getting this quality of care is just not available if you don't have a way to pay for it. So there's that. But also those folks very often need to have legal documents drawn up so they can have somebody, medical powers of attorney, and help make sure that their estate is going to be managed properly. So, you know, Medicare and health insurance certainly won't pay for that. PIP does. And then even replacement services, what is that? Well, have an accident in a wheelchair, I can't mow my lawn. Well, Medicare will laugh if you ask them to do that for you, and your health insurance certainly won't, but PIP will pay somebody to come and clean your house and mow your lawn and do those kinds of things that you physically cannot do but you need help with. So it's amazing how much coverage you're getting for what you're paying, and usually it's 100 to 200 a year. So it's important to know what you're giving up. If you go with your health insurance, you're going to pay your deductibles, your co-insurance. PIP was going to pay after the deductibles and all that. So you're going to have a lot of out-of-pocket, and it's every year. So with your PIP, you don't have that deductible. So if someone goes in a nursing home with their PIP, they're done. With your health insurance, you're going to pay that same $8,000 or more every year. So it's those are recurring costs. They reset every January. So the out-of-pocket can be significant. For Medicare, this is something interesting, that part of the new legislation now also allows you to sue for excess damages. We couldn't do that before this new ruling came down. So if you lower your PIP coverage, things like that, you can, or you have an accident with someone that did, and their car insurance isn't going to cover your lawsuit, you can sue them personally. So if you're in a situation like that and you sued because you're in an accident, say your Medicare paid for your stuff, let's say Medicare paid $500,000 and you sued for $1 million. Okay, so they covered $500,000, you win your case, your attorney takes half, they're going to take a big chunk of it, and guess what? Medicaid is going to take their other $500,000 that they paid. They're going to take it back. You owe that to them. So they can attach any recovery that you get. So probably wasn't worth even having the lawsuit because everybody got rich but you. But so there is a downside to that the Medicare, and if the insured dies, they can take it out of the estate. So Medicare covering auto accident instead of PIP is more like a loan than it is actually insurance coverage. If there's no primary taxpayer, Medicare is always going to pay first, but otherwise Medicare is always second. Okay, so, and that last bullet was what I talked about first. All right, so do you really save money? And this is what you have to think about. I like to give you a perspective on this because, if you tell me, well, I need a car, and say, okay, fine, I can save you a lot of money on that. Why don't we do this? So no, I don't want a bike. I said I need a car. Well, I can still save you a lot of money. How about this car? Okay, that's going to be really cheap, but it's probably not going to get you there.
So, not a 3-seater.
So, am I really saving you money? I can tell you how to cut your grocery bills in half. It's very easy. When you go to the store, buy half of what you normally do. They'll cut your bill in half. I'm a genius. I came up with a great solution. But that's not really saving you money. If I could give you a coupon for 50% off your shopping cart, now I saved you money. But we've been around the block enough times to know you can always get less and spend less. So think seriously about giving up your PIP. And if all this is too confusing, then just forget about it because it's pretty simple. If paying for your full PIP coverage doesn't cause you a financial hardship, then keep the full coverage. You're giving up a lot more than you're saving in your premium. it's really a bargain. You'd have to buy long-term care insurance, disability insurance, accident insurance. You'd have to buy 3 or 4 or 5 different policies, and you still wouldn't come close to the coverage you're getting from PIP. So, you know, I guess statistically, chances of using it are slim, but man, you know, if heaven forbid you land in a nursing home for the rest of your life, you'll be really grateful that you've got that as a safety net. So that's what I have to say about that. So
how do I know if I have full PIP coverage?
Everybody has it right now because that's
Okay.
that was mandated before. So when your car insurance comes up for renewal, you'll either have to sign a document saying you want to change, or I understand that if I have a license for property and casualty, so I know enough to be dangerous. I don't sell it. If I'm not an expert, I'm not going to sell it. But I do have, you know, license to sell it, so I know a little bit. So the way I understand it is if you do nothing, then you're going to keep your full coverage. But you will have that discussion. They have different levels, so you can, if you're on Medicare, it's different. If you're on Medicare, you can waive it altogether, or Medicaid, different rules. But with health insurance, that you can, if it's qualified, you can reduce it from unlimited to 500,000 or $250,000. So you can reduce their exposure. It saves you a little bit, but that's, I can't tell you what to do, but I want you to be informed about the decision you're making, because without a presentation like this, most people have no clue how comprehensive their PIP coverage is, and they don't know what they're giving up.
Guilty.
I think most people are. So, and I've heard from my property and casualty colleagues that sell auto and homeowners that the new legislation also forbids them from making a recommendation. Which, yeah, years ago, I didn't sell Medicare years ago because they had that restriction on agents for Medicare. I said, that's ridiculous. You know, people don't need me to be a glossary. They can read that in the book. They want a professional that can give them honest advice on what's going to be best for them. And I'm not doing it. So, you know, years ago that had changed. But, you know, if I go to the doctor and he says, well, here's my medical library, tell me what's wrong, and I'll write you a script, I'm not going back there. I don't need him for that. I want a professional to guide me and give me good advice, people that I can trust, that know things that I don't know. So they're a little bit hamstrung if they're going to follow the rules and how much guidance they can give.
So you're saying automatically PIP coverage is in my current auto insurance,
Yes.
and that's not the reason why it's so bloody high.
Well, they like you to believe that. You know, the result is that there may be some savings. They changed everything. So this is really very parallel to when we had healthcare reform. So nobody really knows down the road how this is going to play out. Okay. Because, you know, they can't evaluate. I don't think they can use credit scores anymore. So that tool is gone. They can't rate you by county, but they can rate by area, and areas are different than, so everything is different. And I mean, I know on my car insurance, my auto and home, I am not seeing any savings. It's not changing for me. I'm not reducing my PIP. So, you know, it's the same back, you know, before this, you could have said, well, instead of having comprehensive, I'm gonna skip my collision altogether. Well, yeah, I just saved you money, but if you have a car accident, you're gonna have to pay to fix your car. So did I save you anything? You're not spending as much, but unless you're getting the same value for less money, I don't see that as a fair way to say you're saving money.
Is that the presentation? You can turn that off and we'll see your full screen.
You sure you want to do that?
Heck yeah.
Okay. So I think you're still sharing your screen.
I am. I'm not sure where that one came from. That's not me. I want to stop this, but I can't get out of it. Let me see. I'll go to one participant. There
There you go.
That's better. Too many buttons to press.
So I covered a lot of ground. I really would be happy to answer any questions about this stuff.
No, that was fantastic.
Thank you. And if you know anyone, just so you know, I mean, I'm really not about making sales. I was a teacher before I got into this business, and my approach is educational. I'm not there just to sell people. I'm happy to give information. I get a lot of calls from people saying, I'm thinking of starting my own business in a couple of years, and I need an idea of what health insurance is going to cost. I'm happy to help with that and just to educate people, give them the information they need.
Well, we'll be finishing this in a second or two, but the recording that I made will be available probably within a couple hours, maybe tomorrow morning at worst, but we will be able to send people to this recording so they can see the whole presentation. And you're welcome to use that if you want, if it helps you help somebody else. You can point them to our library of recordings and say, go see this one, and you can watch through that and get the details I'm going to tell you anyway, if you want to use it.
Thank you.
Anybody else? Any more questions?
Not a question, just a comment for Jan. Everybody goes through this, whether they like it or not, sooner or later. I consider myself fairly lucky that when I retired in 2013, that I could find my way through the web of COBRA and all the other stuff that relates to it. I'm not saying I'm better than anybody else, but I consider myself lucky that now I feel pretty good about my position. But I really didn't understand EIP from the comments that you made this morning. So that's something that I'm going to look into a little bit more. Like you say, sometimes where you think you're saving money, you really aren't. But you never know, I guess, until you live through it a little bit to know and understand it.
Or get a presentation like this to enlighten you.
So thank you very much for your presentation. I think it was excellent. And
it was fantastic.
More people need to see that information. Any way you can spread it around, the better for the person on the other side.
I'm doing the PIP one for the second time for the chamber. So just that last section, we did it a few weeks ago, and then we're going to do a second time around. But it's going to be a joint presentation, so we'll have some property and casualty agents on there that will talk more about their side and what PIP covers and what the qualifications are, and then I'll just fill in the back end on the health insurance. So if you're looking for more education, I think it's a free thing. You can go to the chamber website. It's on the calendar. You can register there. It'll be a Zoom meeting as well.
Excellent.
Good.
Do we have a Zoom meeting next Tuesday? Is that the second Tuesday of the month? For the not-for-profit, Jan?
It's the second Monday at noon.
The second Monday. So it isn't even next Monday, it's the Monday after.
Right, yeah, Tuesday was the 1st, right?
Yep.
Yeah, so it'll be.
Okay. No,
2
that's
weeks.
cool. Thank you.
Yeah.
Okay,
Okay.
folks, if there's no more questions, I can end the meeting. As I say, the recording will process and I'll get it back up on the site either later today or first thing in the morning.
Thank you, everybody. Appreciate your time.
Thanks again, Jen.
Phil, are you and I going to continue here for a couple minutes?
I'll restart the meeting so I can end this recording.
Okay.
So give me 5 minutes and I'll start it up again.
Okay.